Epack durable in the spotlight after posting a weather-hit Q1 with unseasonal rains dragging down AC sales by over 30%. Despite the setback, management remains confident of delivering 15% growth and 7.5% margins in this financial year, supported by strong gains in components and small appliances. Now, before we catch up with the company's MD and CEO, Puneet is joining us with the highlights of the Q1 numbers.
Well, thank you for that. So definitely the key highlight was the 34% fall in the AC sales, but the overall revenue of the company is down only by 14%, and that's largely led by the other segments, the small domestic appliances and the larger appliances like washing machine, air fryers, amongst others, that have contributed to some of recovering some of the losses in revenue from the AC segment. Now, there'll be three things that we want to watch out from this conversation. One is, of course, how is June month shaped up, because we saw April and May decline. How is June and July shaping up in terms of AC sales? Has the moderation already started of the inventory? Where does the inventory currently stand? That's the second question. And third is largely on the guidance of the management about 15 to 20% revenue growth and 7.5% EBITDA margins. Is that still intact despite a weak Q1? Those will be the three things to watch out for from this conversation from my side.
Okay, thank you for that, Puneet. Ajay Singhania, MD and CEO of Epack Durable, joining us. And great to speak with you again, Mr. Singhania. Clearly, we had a sense that monsoons were going to play dampener. And has that played out as per your expectations?
Probably worse than the expectations. Nobody expects the weather to disrupt, but definitely I think it's one of thing. Overall, AC still continues to grow. I mean, the level at which in India we have the AC penetration, it's a long-term growth story. So one quarter is not actually dampening the entire story. The industry is bound to recover and recover well.
Also in the numbers, because though revenues and profits have been hit marginally because of the seasonal impact, EBITDA is still up and margins have been maintained. How have you managed to maintain the margins?
So see, we have been taking a conscious effort to diversify our product portfolio and customer mix. So that is something which has played out well for us. So our efforts to increase the diversification into other appliances, the non-AC season bit, and also the increase in the small domestic and the larger appliances we just started, like the air coolers and washing machines. So we see positive signs of growth there. And as the season for the washing machines and coolers is more uniform throughout the year, we believe that this will definitely help us leverage a lot of our capacities.
Okay. No, in fact, I said your margins have been maintained. The fact is that they have improved and by 154 basis points. What is the contribution mix that you saw this quarter? Did it change significantly, since you said that you focused on smaller appliances and washing machines, etc., versus air cons or room air conditioners? Can you just tell us the mix and any change that we saw there?
So typically, last year, our overall revenue mix was almost 77% from AC and the balance from the non-AC business, whereas Q1, the AC contributed just 65% of the sales, so 35% came from non-ACs. So obviously, AC is going to grow. I mean, but in the long term, we are definitely looking to outgrow the AC business with our efforts on other businesses like the components business and the small domestic, large domestic appliances put together. So typically, we would want to maintain a mix of 60-65% AC and balance non-AC.
So you would want to maintain 60-65% AC. What are your inventory levels right now as far as air conditions have gone in the industry? Do you see that easing off? Because, discounts also came in to clear off those inventory levels.
So when it comes to inventory, typically the inventory is the pipeline inventory in the trade and then the finished goods inventory, which brands carry. So for us, inventory is generally only into raw materials, which currently is within acceptable limits, and we are not carrying any substantially high inventory levels of raw material at our end.
Okay, so which is why my question is that what is the outlook there? Are you seeing inventory levels as a concern at all? Do you see AC demand restoring now in the quarter to come, or do you see a couple of quarters for that restoration?
Now, obviously, April and May was worst hit in terms of early rains in south and then west of India. Then June saw quite a bit of recovery, especially north dominating and the inventories have normalized in the pipeline. So whatever leftover inventories is there in the trade, both with the brands and the trade, is sufficient to, let's say, keep up the momentum for the festive season of Q2. So Q2 would also be partly subdued as compared to the last year, but Q3 onwards definitely we see a big recovery coming, especially because of the change in the energy efficiency norms. So a new line of a product is set to be rolled in for the next coming season, and we preempted the production to start early this year for the next season requirements. So that would lead to a larger recovery in to the second half of the financial year.
What is this new line of products that you think will aid recoveries?
So, based on the regulation, the energy efficiency norms are going up by one notch, which means the current 3-star would become a 2-star, a current 5-star would become a 4-star. And so we need to redo the entire engineering and create a new lineup of products keeping in line with the energy efficiency norms.
So, for the year, what are you looking at margins? Are you maintaining 8.5% for the next quarter and for the year overall? What is your outlook there?
In the short term, our outlook is that we will maintain a margin of 7.5% plus, whereas in the medium term, we are definitely looking to maintain it at around 8%.
Okay, and growth targets for the year, you're looking at 7.5% for the year in terms of margins, but for growth, you're maintaining 15%. Where is that drive coming from?
So, growth, our earlier numbers of substantially larger growth are still maintained. So, despite AC, overall, we see the industry would grow positively definitely this year, but we will outgrow the industry in AC, whereas our other levers for growth, we believe, are going to give us much better returns.
Okay, thank you so much, Mr. Singhania, for speaking with us on this. Ajay Singhania, MD and CEO of Epack Durable, talking about the outlook coming in, and even quite a few brokerages are saying that they're going to look at an improvement as far as Epack comes in, because everyone knows the story that Brains has played spoilsport. By the second half, they see an improvement over there.